Welcome to FinShoot. Hopefully you've had a look at some of our other videos. If not, go to www.finshoot.com and take a look at some of our other technical training videos. Today we're going to look at RSI, or Relative Strength Indices. The RSI measures the velocity of a security's price and its movement in order to identify overbought and potentially oversold conditions. I'd use the RSI to recognize potential points where I can get in and make an entry or an exit from the market. An RSI is calculated using closing prices, and basically anything beneath 30 tells you that it's an oversold condition and generates a buy signal, and anything above 70 indicates an overbought section of the market. And this gives you a signal to sell. How is it calculated? Well, its RSI is 100 minus bracket 100 divided by 1 plus the average up divided by the average down movement. Basically, we're saying, give me the velocity of the movement. And what that gives us is whether the market is overbought or oversold. Like everything, the trick with using RSI is knowing how to read it. One of the more difficult things, especially when trading currencies, is that the velocity of the move lower tends to be very, very great, whereas the velocity of the move higher tends to be slower. What this invariably means is that the RSI gives you a better signal to sell than it does to buy. As the saying goes, it's hard to catch a falling knife, you tend to get cut. Let's have a look at an example of RSI on the Australian dollar. If we take a look at a few sections here, and I'll examine first its use in looking for opportunities to sell. So taking a look, and you'll see here, and here, and here, were all good points to sell. And the reason was that the market had gotten very overstretched and had then sold off. What this meant was that you could enter and look to take a nice, or look to turn a nice profit. However, if you were trying to buy this, you may well have gotten caught out, such as here, here, and here. These points where, yes, as it crossed the RSI, you were told you should start to buy. However, it went a lot further, which basically put you out of the money and probably would have had you stopped out. What we want to do is take that and compare and add that with another study or another series of studies to give a clearer indication as to what you wanted to do and how you wanted to enter and exit the trade. I suggest experimenting a little bit and perhaps mucking around with the RSI details. So, for example, if we were to have a look at the RSI, and I'm just going to jump in, I'm going to change my RSI, and what I want to do is make my oversold condition 40, leave my overbought condition at 70, and hit OK. Okay, and what you'll see is I start to pick up some more signals. If I jump back in, I can muck around and change this one, and I might make it down to 20 instead. If I make it 20, that's going to broaden out my risk, and it's going to mean I get less whipsawed. Looking now, when I have a look at when it almost touches 20, there's opportunities I would have gotten in on, and I wouldn't have missed too many opportunities at all, and it would have stopped me from being stopped out. Of course, a very, very large movement is going to get you stopped, but in this case, we haven't seen that, and so that's okay. So what we've covered here is using the RSI to enter and exit. Now what I want to do is I might want to add in my 7, 14, and 21 period moving average. Looking at this on the hourly chart, what I can see is a few instances where the RSI has said sell well before the moving average has, and this would have delivered me some substantial profits, potentially. It also may have prevented me, if I'd waited for the moving average, from losing money. So looking at an example here, I can see that the RSI has touched on an overbought condition. It's given me an early indication, but then the simple moving average has crossed higher, and that's going to run me all the way up, and I've made some decent money out of it. And it's also stopped me from being whipsawed. And here is another example here, where the RSI is showing I've been overbought. I enter my trade and I make a reasonable profit. So by combining RSI with moving averages, you start to get a feel for when you should be entering and exiting trades. This has been another video from FinTuit. If you like these, please visit us at fintuit.com, like us on Facebook, follow us on Twitter, and subscribe at YouTube.